Artificial intelligence has taken over not just headlines but the entire stock market. Companies like Nvidia, Palantir, and Microsoft have seen their valuations skyrocket. But after 2 years of non-stop growth, investors are starting to ask the real question. Are we still early, or is the AI bubble already growing? So together, let's figure out for you if investing in AI right now makes sense or it's simply overhyped. But with a strong disclaimer, this is not financial advice, I'm just presenting the facts and not the bias. Since late 2022, with OpenAI's ChatGPT, AI has been the centerpiece and talks of conversation with global tech investment. Companies such as Nvidia, Palantir, and Microsoft are fueling what many call the next industrial revolution in technology. According to UBS, global AI spending is expected to reach $365 in 2025, and that number will continue to skyrocket up to $480 billion next year in 2026. Governments and Fortune 500 firms alike are racing to secure AI infrastructure contracts worth billions of dollars to secure this progress. And these data centers, which run the powerful computers behind the AI technology, are popping up left and right across the country, with over 1,200 of them already built or planned to be built in the US as of 2024. AI is reshaping industries well beyond tech, from logistics and manufacturing to energy and healthcare. It's everywhere. AI isn't just a tech story anymore, it's economic transformation. But when that much capital floods into one sector, speculation almost always follows. Let's take the world's biggest company for example. Nvidia currently trades at a PE ratio of 50, meaning investors are paying $50 for every $1 in profit the company generates. And Palantir, another big tech company, has a ratio of 440, so $440 for every $1 of earnings, territory we haven't seen since the early 2000s dot-com bubble. These high valuations only make sense if these revenues and expectations continue to outperform analyst expectations for many years to follow. But it's also very important there are valid reasons behind these valuations as well. If you take at some of these companies' earnings reports, they continue to crush analyst estimates, further fueling that investor optimism towards higher valuation in the future. So as long as these companies continue to beat expectations and remain very profitable, then that valuation is justified. But if not, something needs to change, and 9 times out of 10 is going to be the price. But Nvidia's 50 times valuation and Palantir's 440 times valuation is still far beyond the well-established tech companies such as Apple, Microsoft, and Meta, which have a 35 times valuation compared to their earnings. That's where conversations have been steering as of late. But it's still very common for tech companies to have high valuations, since these companies are at the forefront of modern innovation. So new products and revenue streams are pretty much expected. That's just something to keep in mind. And historically, every boom has a phase where the prices outpace the profits that they bring in, as similar to what we're seeing right now. And while that doesn't mean that the future of AI is doomed, it does suggest that the market's expectations might be running a little bit ahead of reality. And it is especially interesting to see Michael Burry, the man who predicted the 2008 financial crisis and housing crash, has recently revealed his bets against Nvidia and Palantir. But at the end of the day, he's only one person with an opinion, so just take that with a grain of salt. But let's talk about the facts and not the emotions. Tariffs have threatened chip-producing companies such as Nvidia regarding deals with one of its biggest customers, China. While they have recently bought out the right to sell their Chinese customers, one policy change or headline can reverse those prices. Companies worldwide are also dialing into their AI spending. The renowned research university MIT has recently released a report stating that enterprises invested approximately $30 to $40 billion into AI initiatives. Yet 95% of those organizations reportedly saw zero measurable impact and return into those investments. So in these markets which price in perfection, any misses in their earnings reports or failed investments can trigger sharp corrections in the stock price. So these risks do not make AI a bad investment, but that just means you have to approach it strategically. But that's still not to say that you can't earn from the AI hype. Like the internet boom, real adoption and earnings take time. So even though the dot-com crash was very real, the internet as we know it has played a very pivotal role in human life as we know it since its inception. So even when many startups failed back then, the lasting winners have since then exploded and taken off. So instead of trying to pick the AI winners, you can invest in the broader market and see those returns. So ETFs such as QQQ, which mirror the tech-heavy NASDAQ index, have many of the giant tech companies that we know and love within its holdings that you can still get a slice of if you invest in it, without putting an entire bet onto just one of the companies. But it is still very important to note it had taken 15 years for the Nasdaq index to fully recover and see the same price levels it had seen since the $2,000 dot-com record highs. 15 years. But that same 15-year period also included events such as 9/11 and the 2008 housing crash, two events that had nothing to do with technology but still impacted the returns. Just something to be wary of. Artificial intelligence is not a fad. The technology is changing industries at a rate faster than what we've seen since the internet boom. And with records amount of investment and optimism, this has a chance to fully change their lives as we know it. But just like the dot-com era, not every company leading the charge today will still be a factor in 10 years' time. So it is very important to closely monitor any company you're directly invested into their stock to check their financials and see any changes in prices or revenue. And although nobody can predict the future, you can best protect yourself with proper due diligence. That being said, what are your thoughts on AI? Thank you for letting me be your young advisor today, and I hope you enjoyed the video. Let's all get rich 2025, and understanding the trends in AI can help you get there. Thank you again for your time, and I'll see you in the next video. Have a great one.